Reciprocal tariffs on countries throughout the world. Reciprocal. That means they do it to us and we do it to them. Fellow Americans, this is Liberation Day. Waiting for a long time.
Yes, they appear very protectionist for the United States, but really it's higher costs around the world. It'll flow through to consumers, it'll flow through to businesses, but everybody on either side of the oceans will be paying more back and forth. It sort of just brings the overall global price level up. Announcements last night just added more uncertainty and are dragging it out. The risk of that is that we are seeing businesses and consumers really on pause. This economy was in good shape without this uncertainty. So we know we have a stable base, but as businesses and consumers pause, we could get a self-fulfilling slowdown. We even could eventually get a recession if businesses in particular feel they can't make investment decisions.
Worst case scenario is that the administration says, no, we're simply going to stick with these tariffs and, in a sense, beggar our neighbors and bleed them until they basically give up. In that case, yes, I think that the economy will slip into recession. I think we will end up seeing a bear market precipitate the announcement of a recession. And I think that what's going to happen is not what Trump wants.
Trump's announcement yesterday certainly was a bit of a surprise to the US market. And what was surprising was the magnitude of the initial announcement. We could argue that the market spent first quarter already discounting some expectation of broader tariffs. We can't say tariffs are a surprise. President Trump talked about them throughout the election and throughout starting his presidency. So investors know this is coming, knew this was coming. I think that the market was looking for more final clarity in the announcement. And instead, we got what we really should expect from this administration, which is a very clear starting point. We have a president who believes in negotiation, who doesn't believe in an initial final say. And so what we're seeing in the markets today, down further, is again an attempt to kind of work in, well, if what was announced is the final, then things look worse than we thought.
Well, I don't know the specifics of, I do know how they came up with the formula, but I cannot offer a better formula. The real question that I would have is, why did they come out with such a draconian approach to begin with? And it simply reminds me of the union trade negotiations where management and the unions start off being poles apart with their demands, and then they end up meeting somewhere in the middle. And so right now, we understand what the US's position is. It's a draconian measure, much worse than anticipated. Stocks, as a result, are in free fall because of the expected inflationary impact from these tariffs on GDP and on earnings. The base case is the analysis that was offered by our Washington strategy group called Washington Analysis, basically saying that it's likely to be a global baseline tariff of 10% on all imports. So in a sense, that would be the goal, to bring down from this wide range of tariffs that currently are anywhere from 10% to 54%. The goal is to bring them down to all at about the 10% level. And we think that that is something that the administration is going to work toward. My outlook is that because our base case says that there will attempt to be negotiations to bring down these tariffs, that we don't see it ending up in a recession. We are seeing the stock market get into what we call an oversold situation, where essentially there is now blood in the streets. And opportunistic investors should look to be nibbling at the stock market and taking advantage of it. There's an old saying that stocks tend to pop after a drop. And I think that that is a possibility here as well.